The world of trading, fear and confidence can just be as dangerous as any market crash. And what I mean by market crash, I mean your account literally blown up into bits and pieces and you losing a lot of money. So we're going to talk about overconfidence and fear here. So fear can hold you back from taking good opportunities, while overconfidence can lead you to make reckless and stupid decisions and can make you take unnecessary losses. Fear is a natural emotion that keeps us safe from real life dangers, but in trading, fear can trick us into staying on the sidelines. And even when the conditions are perfect for a profitable trade, this fear of making a mistake can cost us big time. So, you know, don't be scared. And if you're scared, then do it scared. On the other hand, overconfidence can make us feel like invincible trading gods. We might think we can predict every move of the market or that the market makes, and that we're immune to losses. This illusion of control can lead us to take unnecessary risks and make impulsive decisions that end in disaster. Basically, what I'm trying to say is don't full port your fucking account, okay? That's not a smart idea. Stop full porting on trades that you think are going to go your way, and then you start blowing your account. Use proper risk management. Stop over leveraging on your trades. Stop going in more lot size than you should. Stop going in more contracts than you should. Stop going in more shares than you should. It's not worth it. Stop over leveraging. But with all that being said, the key to finding the sweet spot in between both of these emotions is basically we need to manage our fear so it doesn't paralyze us, but we also need to keep our overconfidence in check to avoid making stupid and foolish mistakes that are unnecessary that can lead to losses, right? So, if you're a trader who struggles with fear, here are a few tips to help you break free from its grip. Knowledge is power. The more you learn about trading, the less afraid you'll be to take action. Educate yourself about the market, the assets you trade, and different trading strategies. I personally teach some here, so if you like to see it, I'm still in the works of the series right now, but as I go on, I will be showing you guys. I just need to work on my communication skills a little bit more. Um, but educate yourself. Try different things, see what works for you. Try out different trading strategies, and if you like just something like simple like support and resistance, and stay with it. It's a 50-50. As long as you keep your losers small and you keep your winners big, you should be fine. But with that being said, like I said, I teach my strategy here all for free. So if you want to check it out, go ahead. And I also do trade recaps as well, so you can see how I trade. I also trade live sometimes, so you can see how I trade and how I go about doing the things that I do. All right. Second, small steps. Small steps, big wins. Start with small trades to get your feet wet. As you gain experience and confidence, you can gradually increase your trade size. And if you're not in the best financial situation, then I would recommend that you don't trade until you gain a little bit more of a financial stability. Like what I mean by that is I would recommend that you don't trade if you don't have a lot of money. I would recommend that save up a little bit, get a job if you don't have a job, if you're young, save up a little bit or do a side hustle to get a little bit more money and then put that into trading so you're okay with the losses that you're going to endure your first year, maybe even your second year. 3, protect yourself with a stop loss. You always want to protect yourself with a stop loss. A stop loss is like a safety net that automatically sells what you're trading if the price falls below a certain level. I talked about this in my previous video. This limits your losses if the trade goes against you. So this is good. Um, you want to use it and you want to set your stop loss. I personally set my stop loss in an area where my idea is invalidated, but you can also set your stop loss based on the size that you trade, and not only the size that you trade, but you can set it in other ways that you find more comfortable towards you, right? So whatever you want to do with that, take that information with and do what you will with it. Now, let's get into overconfidence. Overconfidence is Overconfident is can lead you to do a lot of mistakes, and it's just more of an ego thing. You want to accept imperfection. Nobody is perfect. That includes traders. No matter how good you are, you will make mistakes. Accept that and learn from it rather than letting it beat you down just because you were wrong. So you're not always going to be right. Nobody has a 100% win rate. It's impossible. You're always going to be wrong. It's a game of probabilities. If there's a chance that the trade can go against you, it's going to go against you, right? Well, it's not going to go against you if it's a higher probability trade, but chances are there's still a chance where you could do everything right and you could still lose that trade. Um, Use a journal. Use a journal to track your trades, both the wins and the losses. This will help you identify your patterns, learn from your mistakes, and make better decisions in the future. So write down your trades, regardless, losers, winners, whatever. You just want to be able to have those in check, and you want to be able to use that information and that data that you collect for future references. And you want to ideally review this journal every single week after you're done trading. If you trade every day. If you don't trade every day, then you ideally want to review any trades that you took for the week. If you didn't take any trades during the week, then and you don't have anything to write down, or you can still write down on why you didn't take any trades. Also try not to trade every single day. I know some people can get carried away with that, but you ideally don't want to trade every single day. You just want to keep it on the low end. It's not really a serious thing, but not trading every day can put you in a pretty good position. You only want to trade your edge and where you shine the best. Stick to your plan. Develop a trading plan that outlines your rules for entering, managing, and exiting trades. Stick to this plan no matter what, even when emotion starts to cloud your judgment. Stick to your plans, and no matter what you feel or what you do. If your stop loss is hit, please let it go. If your take profit is hit, let it go. Don't move your take profit up just because you want a little bit more money and you want to get greedy. If your stop loss is hit, don't bring your stop loss lower just because you want to go you want the trade to reverse. You don't want to do that. Just let the outcome play out on itself, right? You don't really want to do that. And also stop over leveraging. Overcoming fear and overconfidence is a journey, and it's something that you want to be able to master, because this is going to help you make informed decisions based on facts and logics, not because of fear and your emotions or overconfidence or because of ego because you've been right the whole week. So you're not always going to be right. In fact, if you're on a winning streak, chances of you losing are pretty higher. So take it and just leave it. So with that information, I hope you learned something, or I hope you found this insightful. And yeah, I mean, that's really it to it. There's nothing really more to do after that. Just do what you do. Just do what you will with this information. All right. With that being said, see you guys later.